Good morning, dear colleagues, and welcome to We Are Scania CER. My name is James Armstrong and I'm your Managing Director. Of course, just a few weeks since I last sent out a video updating you on the business plan for 2019 and summarising our 2018 results. Already we are 1 month into the new year, so it's time for a short update on our progress so far. In January we had very good deliveries, 228 new trucks, and that's just in line with our plan. Registered units was even higher at 328 registrations, and in January Scania is market leader in CER with 24.8% market share, and we're leaders in the Czech Republic and Slovakia, and we're third place in Hungary. The truck order intake continues on a good level in January. We took orders for 276 trucks, and that's the highest January result in the last 3 years, and it continues to be strong in all 3 countries. Deliveries were also in line with plan, and at the month end, with a very strong order book, we will have a very busy first half of the year, and I will come back to that situation later on. I'd also like to mention the very good result in the finance organisation, where they financed 63% of vehicles that we delivered in January, and that's the highest penetration in Europe. Fantastic achievement. We also won 3 new orders for buses in January, and just about closed a major deal at the beginning of February for 71 units. And now we are looking set for the full year with an extremely strong bus order book. Used trucks was just about on plan with 55 units delivered, somewhat lower margins than we would really like as we continue to clean our stocks, and that's an important part of the progress. Turning to services, revenue grew quite strongly in January. We were 12% up on last year, and this is coming from both an increase in the retail hours of around 3.5% and the introduction of the new commercial codes and the new discount matrix, and all of this has a positive effect on our selling price. Contract penetration was very strong during January. Actually, 80% of new units went out with a contract, and we sold something like 380 contracts during the month. We had some cost overruns in the month, mainly coming from contracted services costs and non-produced hours, but there were many positive aspects, as I've previously mentioned, that have outweighed this. The result then is we made an operating income of just over 2 million euros and a 7.6% EBIT percentage. That's just ahead of the plan and comfortably ahead of last year's result. I would like to say well done and thank you to everybody involved in producing such a very good start to the year, and that includes all of you who are working in our very important support functions. Now remember, profit is a good thing, it's important. First of all, we have to repay our shareholders for the money they've invested in the business. But of course, we also want to reinvest in our organisation. Last month I mentioned that we have a substantial network development plan in place, and it's interesting to know that of the 33 new workshop building projects around the world, 5 of them, that's 15%, are currently underway in our Central European region. I'd also like to report that Scania's Executive Board have just approved at their last meeting at the beginning of this month our investment in s.r.o, where we will build a new workshop there. Land is currently under negotiation, and we aim to open the facility in the middle of 2020. Now looking forward to the coming month or two, we do have some challenges. Of course, we're continuing to work hard and to develop the business as we can, but some of the challenges we face need to be dealt with. First of all, we have, as I mentioned earlier, a strong order book and a lot of deliveries coming through in the first 4 months of this year. That means, of course, those units will come into stock and we will have a new vehicle stock peak. Means we have to speed up on our deliveries in the best way that we can. We're starting to get better reliability coming from the factory, and on our side it's important that we are planning in the best way possible. So good liaison with the customers over delivery dates, finance in place in plenty of time, planning with bodybuilders, planning to have the PDI done, and of course making sure that we've got the capacity to get through the PDI work. Secondly, I mentioned that used vehicles are going well, but we are suffering a little bit with our stock aging, and we have to bring that under control to keep our stock fresh and clean and attractive to customers. And then finally, I think we still have some way to go to improve our working efficiency in our workshops. We have some unsold hours, we need to deal with this, and I think we can do more to improve our productivity and efficiency. And of course, the new mechanic incentive program rewards improvement in this regard. Okay, this is it from me. In summary, we can say we've had a good start to the year. We have some challenges in the coming few months, good challenges I would say, and 11 more months to go. Speak to you soon. Goodbye.